Welcome traders and investors. My name is Andy. I'm the founder of Dalrymple Trading. It is Thursday, the 11th of September, 2025. Having a look at our pre-market analysis for the US 500, S&P 500, and WTI Crude Oil. What we're seeing in the S&P 500 at the moment is prices consolidating on the moving average at the moment. And like I said, we hit all-time highs on Wednesday at 65.60 and then corrected to the downside. And then we're just finding stability in this zone here. So what I'm expecting is a pullback down further, okay, prices to get back into the range before the bulls push higher again to break the all-time high again. We've seen a sequence of all new all-time highs, obviously one on Wednesday, prior to that on the 5th of September. Prior to that, we had one on the 29th of August and the 15th of August. So what we're seeing is prices are continuously getting pushed up higher every time there is an opportunity. So definitely, like I've been saying in all my videos, this is a great opportunity if you're an investor or a trader to actually get into the market with the right risk to reward ratio in place. You can always work your way down to a lower time frame. Generally, I tend to stick to the 1 hour time frame purely because I'm a bit of a swing trader. I find that for my personality and for what I trade, it's the best fit, but it could be different for you. And you sort of got to trade it and find out what your best fit is. The other thing to keep in mind when you're trading a certain time frame is how much cash do you have to trade with, right? So the longer your time frame, the more money you'll need to have involved. Why is that? Because the actual the length of the I wouldn't call it the length, but I would call it the up and down of the price pivot can really affect your trading if you trade long time frame with a small account. That can really impact you. So if you are trading larger time frames, you also need to make sure that how much you're actually risking is very thoroughly calculated, because the moves can be quite drastic in one way or another. So moving on to WTI Crude Oil, what we saw is after overnight trading, we saw a gap down and we saw prices sell off. So at the moment, we're in the middle of a bull trend to the upside, but we did see this overnight correction. I had a look on the internet, and basically it seems to me pretty much around the supply side issues with OPEC. But this market has been pretty bearish for quite some time, right? So at some point, somewhere, some event will happen where this market eventually gets pushed up higher. Historically speaking, crude prices are at all-time lows. So at some point, something is most likely to occur, some sort of trigger that will push these prices higher. My play with this one at the moment is wait for the short-term bears to basically finish off their selling and then look to basically buy back into WTI crude oil. Remember as well the elephant in the room, which is the gap fill. So if you are trading CFDs overnight, you'll see that it gapped down. So at some point, that gap needs to be filled. That doesn't mean it will get filled today. It might take a day, sometimes even a week. I've seen where we haven't filled a gap in a week's time. So we just have to see how this one plays out. At the moment, the bias is still to the upside, but it depends on what happens with the next couple of hours with the price action on this chart, whether we're going to go back up or not. But yes, at some point that gap will need to be filled. Something to keep in mind. So keep everyone updated as we progress throughout the week. Thank you.